The top stories live from the Sky News City studio. The Chancellor tells Sky News he'll do whatever it takes to bring down inflation, even if it means a recession.
There's nothing automatic about bringing down inflation. It is a big task, but we must deliver it, and we will.
No sign of inflation putting off shoppers, though, as retail sales come in stronger than expected. The former Tesco chairman John Allen says he may sue the Guardian newspaper for its reporting of allegations about his personal conduct. And how augmented reality and artificial intelligence are being brought together to help people with hearing loss. Good morning, this is Ian King live, an hour of business and economic news from the heart of the city. Well, the Chancellor has told Sky News the government will do whatever it takes to bring down inflation, even if that means a recession. Jeremy Hunt said he'd fully support the Bank of England raising interest rates again, with analysts now expecting rates to peak at 5.5%. He's been speaking with our economics editor, Ed Conway.
We will halve inflation, grow the economy, reduce debt.
It was the first of Rishi Sunak's 5 pledges as Prime Minister, halving inflation. Now the Chancellor says he's happy for Britain to go through more economic pain if that's what it takes to do it. It comes after higher than expected inflation data prompted markets to lift their interest rate expectations to 5.5%, something that could push the UK into a slump.
Are you comfortable with the Bank of England doing whatever it takes to bring down inflation, even if that potentially would precipitate that recession that you've almost just avoided?
Yes, because in the end,
even if there's a
the
recession.
inflation is a source of instability. We have to support the Bank of England in the difficult decisions that they take. And what I would say, Ed, is that when the Prime Minister announced that it was his objective to halve inflation in January, there were some people who derided that. They said, well, it's automatic. Inflation's going to come down anyhow. There's nothing automatic about bringing down inflation. It is a big task, but we must deliver it, and we will.
Even if it means precipitating a recession?
Well, we will deliver this task, and we will make sure that the government plays its part, the Bank of England plays its part, but it is not a trade-off between tackling inflation and recession. In the end, the only path to sustainable growth is to bring down inflation.
One of the main reasons Liz Truss and Kwasi Kwarteng were booted out of office last year was that after the mini-budget there was financial chaos and interest rate expectations went up to 6%. Rishi Sunak and Jeremy Hunt's main claim was that they were going to stabilise the economy. But now, with interest rate expectations back up to 5.5%, even that is under question.
The Prime Minister's 5 pledges were supposed to be easy. The problem is that solving number 1, halving inflation, might mean failing number 2, growing the economy. Ed Conway, Sky News.
An analysis by PwC suggests that total household debt in the UK has exceeded £2 trillion for the first time. And research by the consumer lender Fluro suggests that's only going to rise. Joining me now is Fluro's Chief Executive, Nick Harding. Nick, welcome to you. I mean, one of the things that struck me is you're seeing a lot of demand right now for consolidation loans.
Yeah, good morning, Ian. Nice to see you again. We are seeing demand for consolidation loans, but indeed we're seeing demand across all categories. If you compare figures with this time last year, the loans being dispersed in the market are approximately similar to this time last year. However, the number of loan requests has gone up by about 22%. And in particular, we're seeing that from some challenging parts of the market, you know, lower income households, households where there's often one person in the household, where they're more susceptible to the price rises that we've been seeing.
22% rise in loan requests. So, I mean, that's pretty stunning.
It really is. You know, there's an element of it that we think is slightly more positive and an element that we unfortunately think is negative. An element of it is that customers are going into the market to find credit, and they're seeing the credit is more expensive. And so fundamentally, they're saying to themselves, we're not going to make this life purchase at this moment in time, which we think is ultimately, you know, a responsible decision to make. But at the same time, we're seeing lots of customers come to the market because they need credit. And that's more concerning because, you know, we're seeing those households having some distress. And we think that, you know, in many cases, more credit is probably not a good thing.
What do you think's driving that? Is it higher mortgage rates, higher rents?
We think a combination of all of the above. Energy prices have certainly been a factor in terms of you know, household challenges. But we're seeing, you know, by the end of 2024, 5.1 million mortgage holders will have their fixed rate period come to an end. And there's going to be a big jump up in terms of costs for those households. So those households coming to terms with that is a really challenging situation.
I mean, you offer loans both directly and via partners. What's the sort of typical size of a loan you're being approached for these days?
Yeah, so we offer loans to prime and near prime customers. This is the same customers that banks would often lend to. The average size of a loan that we disperse is about £8,000, and these customers are customers that typically have gone to a bank and are quite often badly served by a bank. So they'll see a higher APR on the loan that than the bank originally had shown, and they'll say to themselves, I don't feel comfortable with this. I prefer to go and look around the market. They will then do so, and they'll see a better offer from a company like Fluro, like mine. And fundamentally, we then focus on providing that customer with an amazing customer experience. We're a responsible lender that pays a lot of attention to managing the risk, but also making sure that customer, the funds are dispersed quickly, and we look after that customer.
And what's the sort of typical duration of a loan?
The average is about 50 months. These are typically life purchases, typically, people buying a new car, home improvements. You mentioned debt consolidation. We think that responsible debt consolidation is a really, positive thing for consumers. If you have some credit card debt that's built up, to pay that down on a lower interest rate is obviously a sensible decision.
I'm amazed, given how often the personal finance pages have written about this, that there's anyone who thinks borrowing on a credit card's a good idea.
Well, ultimately, life events do occur, and sometimes they're a surprise. Someone's boiler might break down, and they've got to replace their boiler. It's about paying that credit off as quickly as possible. That is the sensible, way for that customer to handle that. So we don't necessarily think that credit cards or any form of lending is bad. It's about how you use it responsibly, and that's where the lenders also have a duty to make sure, as Fluro does, that we encourage our customers to be responsible.
And given what you've just heard from the Chancellor there, would you anticipate seeing loan demand increasing in the latter half of this year?
It's certainly possible. What we're hearing from both government and from the Bank of England is that they are going to, get inflation under control. And ultimately, that is necessary. But what in turn that's going to mean is higher interest rates in the market. We saw yesterday that Nationwide increased some of their borrowing costs for mortgages by up to 0.45%. That's material when you think only a couple of years ago, the whole mortgage might only cost 1.5%. So we're seeing big increases on a day-to-day basis, which is unfortunately going to impact households.
All right, Nick, got to leave it there. Good to see you this morning. Thank you. Stubborn inflation doesn't seem to have been putting off shoppers, with retail sales coming in stronger than expected last month. Well, the Office for National Statistics says sales volumes grew by 0.5% month on month in April. Economists had predicted a rise of 1/3%. Well, that compares with sales volumes in March, which fell by even more than expected, first reported by 1.2%. But volumes were down by 3% compared with the same month last year, although inflation meant shoppers spent more. Well, joining me now to talk about this is Roland Prince, who's Chief Commercial Officer at the payments platform Adyen. Roland, good to see you this morning. Is this really a bounce back from a rain-affected March, do you feel?
Thanks for having me, Ian. Good morning. Yeah, I think it's, the weather has clearly impacted shopping behavior this month, I think.
And obviously there was a big increase, 10.1% in a lot of state benefits that were paid out, welfare benefits, pensions last month. Do you think that's probably driven demand to an extent as well?
If there's more spendable income, people will definitely use that. Yeah.
So where do you think we go from here then in terms of retail spending? I mean, the Bank of England said last week that only 1/3 of the interest rates thus far over the last 17 months have hit home and impacted shoppers. Is there going to be a shock? Do retail sales fall off a cliff at some point in the future?
Let's see. I think we've been spending a lot of time at Adyen doing research. We've done a big research over the past period, and we're seeing that consumers are very much looking for deals. So consumers are very focused on finding discounts, finding deals. So it is really in the heads of people, and it will show in behavior. And I think retailers need to really prepare for that and act on that.
I mean, obviously, you're a global business. What are you seeing across the rest of Europe right now? I mean, we learned yesterday, for example, that Germany has gone into recession. A lot of that appears to be weakness in household spending.
I think, we're seeing the same trend across Europe. Consumers are very focused around, spending, looking for discounts. Whereas on the other side, our research, again, consistently across Europe shows that retailers that have been spending and investing in technology to support their customers better across the different sales channels, online, in-app, or in-store, they see a bigger impact in their sales. So there's a bit of a dual message for retailers: deal with discounts, people look for discounts, but at the same time, if you're investing in supporting your customers better, that will pay off on the long term. So how do you deal with that?
Yes, you're talking about something here called a unified commerce system. What has the uptake been like across Europe in this regard?
Slower than you would hope. I think a lot of retailers struggle with older technology. We've seen that there are still lots of retailers that want to do much more. And unified commerce, what is it? It's about supporting customers really the way they want to be supported, whether they interact with you online or in a store or on mobile. That's what unified commerce is about. Regardless of the channel, give them the support, the service they're looking for. And it's not easy because you need to bring technology in-house to really make that possible.
I'm probably being slightly unfair by asking you this, but if you had to generalise, which segments of the retail sector have been better at doing this, or is it just down to individual companies?
Nah, it's definitely individual companies that do really well. I think companies like Uniqlo, Nike, they have really focused around what is real, true ways to use technology to make shopping more effortless, more seamless. Self-checkout, but also thinking about different consumers have different ways they want to interact with you. Make that possible. Not a one-way street. Really diversify per customer segmentation, so to say. Everybody has different needs.
What about the role of consumers themselves in this? Is this a change in behaviour that's almost being driven by consumer demands?
It's very much driven by consumer demands, I would say. Our research showed that 61%, so 2/3 of people, they make it very clear that if they're able to, for example, buy something online with a retailer, bring it back in store, they're going to be more loyal to that brand. So it's simple things like this. Make it easy for them to interact with you, and they will become more loyal, and they all claim they will.
OK, Roland, we have to leave it there. Good to talk to you this morning. Thank you.
Thank you, Ian.
Some other business news stories for you now. And the former chairman of Tesco and Barratt Developments has said he may sue the Guardian newspaper for its reporting of allegations about his personal conduct. John Allen has stepped down from both positions during the last week amid concerns that the allegations, which came from anonymous sources and which he vehemently denies, were causing a distraction to both businesses. Well, Mr. Allen, a former president of the CBI, told The Times, "I'm determined as far as I possibly can to prove my innocence." The drugs giant AstraZeneca said this morning that a combination of two of its blockbuster cancer drugs had shown positive results in trials when they were used to treat recurrent endometrial cancer. AZ said that using Imfinzi, a treatment for lung and bladder cancer, in combination with Lynparza, a treatment for ovarian cancer, had demonstrated a statistically significant and clinically meaningful improvement for patients. Endometrial cancer is the 6th most common cancer in women worldwide. More than 417,000 patients were diagnosed with the condition in 2020, while more than 97,000 women died from it that year. A whistleblower whose tip-off helped the US Securities and Exchange Commission bring a successful bribery case against the Swedish telecoms equipment maker Ericsson has reportedly received a record $279 million reward. The SEC, which pays whistleblowers awards of between 10 and 30% of fines it collects in civil enforcement actions, where it collects more than $1 million, revealed the payment earlier this month, but it did not say which case it was connected to. But the Wall Street Journal is reporting that the payout relates to the $1.1 billion settlement that the SEC reached with the Swedish company in 2019. And the chief executive of OpenAI, the company behind the generative artificial intelligence chatbot ChatGPT, insisted this morning he had no plans to leave Europe. Well, Sam Altman was speaking amid signs of growing differences between the US and the EU over how to regulate AI technology. The European Parliament moved earlier this month to expand its proposed AI Act to take in so-called large language models like OpenAI's GPT-4, and Mr. Altman indicated earlier in the week that this might lead to the company ceasing to operate in Europe. Well, in a tweet this morning, Mr. Altman appeared to play that down. He said, "We are excited to continue to operate here and, of course, have no plans to leave." Now, Rishi Sunak is due to meet Sundar Pichai, the Google chief executive, in the latest of a series of conversations he's had with tech industry executives. Well, on Wednesday, he met chief executives of ChatGPT firm OpenAI, Google DeepMind and Anthropic, in which they discussed the potential risks posed by artificial intelligence and the need to regulate it. But is regulation even possible? Well, joining me now is Anantha Sekar, the artificial intelligence lead at Tata Consultancy Services. Anantha, welcome to you. Is it even possible to regulate AI? I mean, the European Parliament seems to think it is.
Absolutely, it is possible and it must be done also. If you really look at it, we have had challenging technologies before, be it cloning, be it genomics, gene splicing, or autonomous vehicles. We have found how to implement guardrails on them to put bounds on what can be done, what can't be done. So absolutely, it is possible to regulate and we should.
But what does this regulation look like? I mean, there is a sort of perception that a lot of this stuff is kind of black box stuff that's difficult to get into.
Yes, there is some black box AI and there is a white box AI. We think that a lot of the AI that will be adapted by the enterprises will actually be white box AI. You take a decision using supported by an AI tool on a mortgage application or something, you have to be able to explain back to them. So we call it explainable AI. So that's what white box AI means. So you have to be able to justify what sources, what data you use to train the model, so you are able to demonstrate that the accountability is with the company to demonstrate that there is no bias, that you are taking a fair decision, positive human traits, etc., etc. So the responsible AI is absolutely a big part of how this has to happen. On top of it, there's a level of transparency that has to come in. Through regulation, we can insist on certain level of transparency that has to happen so that the public are aware, like you are doing in your shows. And once the public are aware, then there can be a debate in the society in terms of what is the right balance between innovation and regulation.
Rishi Sunak, after his meeting with those industry leaders the other day, said it was important to demonstrate to society the benefits of AI.
Absolutely.
Are you surprised that he even has to make that point, though?
There is a lot of concern that is going around AI. People are not talking enough about what AI can do. If you really look at it, a huge transformation is going to happen across all industries, touching every part of the business, right? Technology is going to be a bigger part of every business process in the world, in every industry. How is that? Who is going to deliver that? Transformations take a lot of people. So we are going to need an army of people to deliver the change that we have to achieve, right? There's a level of personalization that is now possible in terms of be it product creation, services innovation, down to ways of working in terms of how we deliver these services, inclusivity in terms of embracing everybody, people who are essentially challenges in terms of how they can interact with systems, and as well as the elderly to the young to the people in remote parts of the world. The opportunity is there to absolutely take knowledge to the front line. Okay, so the real value of AI is there, and it is going to create a lot more jobs than it destroys.
Yeah,
okay.
You're clearly very optimistic about it. Why is it, do you think, that the conversation about AI seems right now to be so dominated by concerns about risk?
It's natural for anybody to look at it in terms of how it impacts what's happening today. It's people in the industry who have to be talking a lot more about what's the value creation opportunity is. Any analyst you talk to will tell you that AI is an enormous value creation opportunity, probably the biggest that we have had, something that can help businesses with top line and with bottom line simultaneously, okay, and fairly in quick order. Those are not opportunities that come to businesses all that easily. There are huge number of jobs that will be created, right? There is an enormous amount of data that we are assuming has to be processed. Somebody has to deal with it. So data analysis jobs will go through the roof in terms of explosion of jobs on that. You need detailed knowledge of business processes, data, technologies, everything to be able to work in AI. So the fears are overblown at this point of time because people are naturally focusing on what worries them. But once they see the value, then they will understand that actually AI is a force for good for the society.
I mean, the conversation about AI has really sort of taken off since the launch of ChatGPT.
Yeah.
Are companies actually equipped to talk about it enough? I mean, you obviously make a living from providing consultancy services, but I mean, if you take the average chief technology officer in a FTSE 350 company, are they sufficiently getting to grips with this as a technology?
Some yes, some no. Everybody has now become aware. That's the good part of what ChatGPT has done. GPT has been around for a while, but ChatGPT has put a easy interface on top of it as an application. Generative AI is the technology. The potential for generative AI as a technology is enormous. It has been around for a while. Everything that it can do, be it in terms of images or in terms of synthetic data and anything that can be achieved with generative AI is fully transformative. And there is a lot of literature now being pushed out by people, thought leadership papers, analyst meetings, conferences. It's the talk of the town right now. Okay?
It really is.
So people are coming up to speed. But this is the kind of space where unless they try it out hands-on in their own company through experimentation and allow their employees across cross-functional teams to participate in such experiments so that you get a view in terms of the people impact, the legal, the risk, all kinds of views around that area, they won't be able to progress and write it into enterprise strategies and take action further.
All right, Anantha, we've got to leave it there, I'm afraid. Good to talk to you this morning. Thank you.
Pleasure meeting you.
Still to come here on Ian King Live, we're going to have a look at how global markets are doing this Friday morning. Don't go away.
I'm Katie Spencer and I'm Sky News' arts and entertainment correspondent. As a team, we've interviewed some of the biggest stars in the world, the likes of Tom Cruise, Brad Pitt, Sir Elton John. We try to give you an honest sense of how these people really are.
Well, last night's mixed finish on Wall Street, in which the Nasdaq rose by nearly 1.75%, powered by an astonishing 24% gain for the chip maker Nvidia, was followed by a largely positive session for equities in the Asia-Pacific region overnight. As you can see, only the Hang Seng finished in negative territory in Hong Kong. Well, in Europe, stocks have also been mixed this morning. They're all in negative territory right now, in fact, so things have switched to the lower side of things in the last half hour or so. Talking points today include the French supermarket operator Casino. The shares have fallen by 6% after they returned from suspension today, and that is amid ongoing talks with creditors. Well, here in London, the FTSE 100 is also in negative territory, albeit it's only down around 0.1% right now. Some of the mining heavyweights are protecting it from further falls there. It's got to be said, there are not too many features for investors to hang their hats on in the FTSE this morning. Outside the FTSE, though, Asos, the shares there are off by some 3 1/3% right now. That is on news which came out late night after the market shut last night, that it's raising £75 million worth of money from shareholders via a new issue of shares. And the digital consultancy Kin & Carter, its shares are off by some 8%. That's after it reported a slowdown in new sales growth. On the foreign exchange markets, well, the US dollar is currently on course for its third weekly gain as expectations build of further interest rate rises from the US Federal Reserve. But the pound is up by nearly 1/4% right now against the dollar. The euro, meanwhile, is also slightly ahead against the euro. So things have changed around since I wandered into the studio on that front. As for the oil price, well, that's slightly lower this morning. Look at that. It's unchanged now. It's all changed in the last half hour. Try and write these scripts as close as I can to coming on air, but they still catch you out occasionally. As things stand, the oil price is on course for only its second weekly gain in 6. A barrel of Brent crude will currently set you back $76.26 a barrel. It's more or less unchanged, actually. I'm joined now by Sophie Lundier. She's lead equity analyst at Hargreaves Lansdowne. Sophie, good to see you this morning. Let's start with Asos. This announcement came out after the market closed last night. I gather they've got this share issue away.
Hi, good morning. Yes, absolutely. So this was really the big one from yesterday. And as you say, it was after the bell. So essentially what Asos are trying to do is shore up their balance sheet to the tune of £75 million from 3 main shareholders. But the very interesting point from my perspective is this £5 million retail raise that they're trying to achieve. Now, the main thing really for me here is that those shares aren't being offered at a discount, which should really be taken as a positive, in my opinion. No equity raise is ever a great look, to be honest, particularly in these circumstances. But the fact that those shares aren't being offloaded at a very steep discount is significant and does show a mark of confidence from management.
It really does. I mean, the fact that he got this away so easily is also quite striking.
Yes, definitely. It does show a certain level of underlying strength, arguably. There's certainly a lot of conviction there. And I think a lot of that comes from the fact that there is an awareness that Asos, frankly, does have a strong proposition and a decent brand. It's being bruised by external conditions more so than anything, including some really quite crippling wage inflation in its distribution centres, things like that. The cost of living crisis has put it in a really difficult spot on the margin front as well, not to mention demand too. So there's a lot of things going on outside of its control.
Sophie, let's stay with retail, because yesterday we had results from Pets at Home, which really did shoot the lights out, didn't they?
It did indeed, and Pets at Home, a stock close to my heart. I can certainly resonate with the strong sales performance there. They had record sales of 6.6%, and that's why I'm keen to talk about it today, because we keep hearing about the cost of living crisis. Retail is a difficult spot and all of this, but actually Pets at Home is doing remarkably well. But what is going to be very important to monitor from this point is what happens to margin. So we're seeing that people are spending less on more lucrative things like accessories for their pets, but they are still spending heavily on food, because cutting back on feeding and looking after our pets is going to be one of the last things that gets trimmed, even when times are difficult. So what that means, though, is that margin accretion, inflating margins, is quite a difficult thing to do at the moment, and that's what I'll be monitoring for the next set of results.
OK, Sophie, I'm afraid we've got to leave it there. We're really pushed for time today, but lovely to see you as ever. Thank you.
Thanks.
Still to come here on In King Live, the boom in art investment that's led to a major acquisition. Don't go away. Welcome back. Now, Russia's war on Ukraine has raised the threat of cyber attacks on Western businesses and governments as entities sympathetic to the Kremlin seek to undermine those countries supporting Kyiv. Mobile networks are under particular pressure, with an Israeli newspaper recently highlighting how they're being weaponised by bad actors through the ability to pinpoint the location of mobile phones and intercept messages. Well, the Swedish company Enea provides telecom security software to some of the largest network operators in the world, including Vodafone. Joining me now is its President and Chief Executive, Jan Hagelund. Jan, welcome to you. Are these threats to mobile entities, networks coming more from state-backed entities these days then?
Thank you, Ian. It's a pleasure to be here. Yes, they are. And we see that with these threats coming from different kind of sources, can be individuals, can be private companies selling this as a business, and in fact, criminal gangs. There are reports saying that state actors, in fact, is growing in importance, and I think the Ukraine war. It's a fair guess to say that is fueling activity in this area. And as a security specialist, we see this globally.
And are these Russian entities particularly sophisticated compared with some of the other state-backed entities that we see in the cybersecurity space?
It's fair to say that the threats against mobile networks are becoming not only more and more, but they're becoming more advanced also. You see that there are a lot of resources behind these attacks. One of the attack angles is through the signaling networks, where all the mobile networks are connected to each other. They need to be, otherwise we wouldn't be able to place calls or roam between different countries. But these signaling networks also provide vulnerabilities that would then, with the right capabilities, allow not only location tracking, but in fact, interception of calls also.
And is this a relatively new weapon in the armoury of those who would seek to do harm?
Yes, you can see, and we've been looking at specifically the Ukraine war, and you can see there that mobile networks are both targets in the war, but they're in fact also weapons. And there have been reports where location tracking have been associated with some military activity. We can also see that Ukraine have done some impressive things where they have, for example, blocked the access to their networks for incoming Russian subscriptions and phones and people, which in fact then has hampered communications quite significantly for the attacker. I think there's a lot of learnings for other countries on what the Ukrainians have done.
Is this all translating into extra orders for you? I would assume it would be.
We're a listed company specializing in products and expertise for cybersecurity, and we see a lot of interest in our solutions. We are often taken for advice in this area. We have a pretty broad customer base, more than 100 operators across the world, and we have new business, yes. So we're happy about how that is developing.
We talk a lot about artificial intelligence on this programme just now. To what extent are bad actors incorporating that into what they're trying to do with networks?
The threats against mobile networks are becoming more and more advanced, and artificial intelligence allows you to stage more advanced attacks also on a global scale. But artificial intelligence is also used on the defense side, and we have solutions whereby we can use artificial intelligence to counter also the unknown. We can see patterns, and by using artificial intelligence, quickly adapt and create countermeasures.
Separately, Jan, what are the other developments in the sector that are exciting you right now? I mean, I see, for example, Microsoft is talking about taking its Azure cloud operating system into telecoms. What's the implications of that for you?
You can say that telecoms are becoming large IT systems, and therefore, not surprisingly, cloud technology is the basis of all telecommunications. And Microsoft is among the players then who've taken significant steps into telecommunications networks. For us as a software company, this is good because we specialize only in software applications. Our software runs on any cloud. So I think the evolution here will bring a lot of benefit. It's going to bring agility, speed, innovation, and also, in fact, operational efficiency.
All right, Jan, we have to leave it there. Good to talk to you this morning. Thank you.
Thank you so much.
Time for a look at this morning's business pages. And the Financial Times is currently leading its digital editions with news that the US President Joe Biden and the Republican House Speaker Kevin McCarthy have moved closer to a 2-year deal to limit government spending and averse a US debt default. The FT splashes its print edition, meanwhile, with a report that the government is considering reforming the Pension Protection Fund. That's the lifeboat scheme which protects people with a defined benefit pension when their employer becomes insolvent. The FT says that proposals being considered by the Treasury would see the PPF's remit widened, so it has a more active role in taking on company pension plans that have not failed. Well, that story also makes the lead in the business pages of the Daily Telegraph, which reports that the Tony Blair Institute will recommend next week that sponsors of the smallest 4,500 DB schemes should be allowed the option of transferring to the PPF. As part of its coverage, the Telegraph also has an interview with Andrew Griffith, in which the City Minister says pension schemes need to take a greater degree of risk with their investments. Meanwhile, the Times leads its business pages with news that the US drugs giant Eli Lilly has suspended a potential investment in Britain because of what it describes as the country's stifling commercial environment. Its comments come amid industry unhappiness at a £3.3 billion NHS sales levy on branded medicines. The Times also reports on last night's unexpected £75 million fundraising by the online fashion retailer Asos. Well, joining me now as ever on a Friday morning is Neil Collins, the financial markets commentator and Evening Standard columnist. Neil, good morning to you. The big market story of the week has been this spike in gilt yields. You've got some fairly interesting observations on this.
Well, we thought after the excitement of Trussonomics, which drove yields on government securities to 20-year highs, we were going to have a quieter time after that. And yields indeed came down to not much more than 3.5%. But in the last few weeks, they've gone up a long way, and they're almost now back to the levels that they were at the height of that particular excitement. This matters because if the government has to pay more for its new debt, then obviously it has much less to spend on anything else. And at the moment, the government is trying to, last month it borrowed £25 billion new borrowing to try and bridge the gap between income and expenditure. And that money has to be paid for, and obviously the higher the cost of that, the less there is to spend on everything else. Now, you could ask yourself why this is happening, and I think the things really spooked the markets are the inflation figures which we had a couple of days ago. Not so much the headline rate, which showed a very small drop, but the so-called underlying rate, which actually rose. And this is the thing which makes people most nervous. And it looks as though the fight to get inflation out of the system is really going to be much longer than many people thought. And that is why the buyers have departed the gilts market. And oddly enough, AJ Bell, the money manager, reported that its clients are now buying gilts. So the individuals seem to have sensed that there's something there's value to be had here, even if the professionals are all saying there isn't, which is quite an interesting contrast. But this is quite serious. You know, this level of interest, the amount that the government's got to pay, is, if it stays at this level, then it's going to be extremely difficult to finance the government spending, even at the current rate, let alone the projections in the future.
Which is pretty terrifying. I mean, that ultimately then means to either rises in taxes or cuts in public spending.
Well, Jeremy Hunt promised to do the hard road when he became Chancellor. And in one way he did, by raising taxation, fairly eye-watering level. But we seem to be in a position where we have the highest level of taxation since the Second World War. And we also have an eye-watering deficit between what the taxation brings in and what the government spends, which is quite an impressive, rather grim achievement to have done both at the same time.
What a downbeat note on which to end. Neil, always good to see you this morning. Thank you.
Pleasure.
Now, more than a decade of near-zero interest rates has raised the profile of investing in art, especially among high-net-worth individuals. That's not only created a boom in art, it's also created one in the often complex business of packing, transporting and shipping fine art and antiques around the world. Well, one of the fastest-growing players in the field is the French company Convelio, which has just acquired the London-based fine art services provider Connoisseur International Fine Art. Well, joining me now to talk about this is the Managing Director and co-founder of Convelio, Edouard Gouin. Edouard, good to see you this morning. What attracted you to this business?
Good morning. Well, my co-founder and I historically were working for tech companies, and then we moved into the fine art industry about 7 years back. And that's at that time that we realized that to actually transport a piece of art, it was a significant budget, and to get a shipping quote, it would take essentially anywhere between 48 hours and 5 days, and the geographical coverage was relatively limited. So we thought that actually creating a one-stop shop from which someone can get instant shipping rates that are competitive and with a large geographical scope was the way forward. And so that's why we decided to build 6 years ago now.
Why is it a specialised business? Why is it something that a normal logistics company couldn't handle?
Well, there are many elements, right? Like the first one is whatever we transport are unique, right? And so the level of quality and of details you need to put into picking up an artwork, packing it, creating it, managing the customs, booking the right type of freight, and so on is something that's highly specific, highly specialized, and so that's not. That, let's say you cannot move a $1 million, like a £1 million painting the same way you would send a pair of sneakers, obviously. So there are a lot of expertise that goes into each one of these steps, and that's one of the reasons also why we did the acquisition of Connoisseur in the UK.
How do you charge your fees? What's the basis for it? Do you is it a function of the value of the item being transported?
Not really. So the only element that's linked to the value of the artwork is essentially the insurance, right? But otherwise, the way a price is calculated is a set of budgets that corresponds to each step of the transport. So typically the first step will be picking up an artwork at a gallery or an auction house, and that has a certain cost, packing it has a certain cost as well, booking the freight has a certain cost, doing white glove delivery as another. And so we kind of combine all of these different budgets from our own operations, but also from external companies that we work with, and we take a margin on top.
And how expensive is the insurance?
Well, it will depend on the price of the artwork, but it essentially is between 0.3 and 0.8%.
And did you have a UK presence before this acquisition?
We did. As a matter of fact, we had, before the acquisition of Connoisseur, we had a team of a bit more than 35 people based in London. So now that brings the size of the team to a bit more than 50 people in the UK.
What are the big trends that you're seeing now in terms of the art that you're transporting? What's hot right now?
Well, we don't really follow trends as per se. I mean, like there are some let's say, there are some trends that we see obviously, but like it's more linked to what we see at auctions, right? So it's typically like right now we have a lot of contemporary sales that we're transporting at the moment, but in general, I would say that the overarching trends that we're seeing is more as to the way the art market as a whole is moving, and that is moving towards more digitization, primarily as collectors are younger and younger, and obviously expect a different kind of experience whenever they're purchasing art, right? So we see more trends again on the art business as a whole, rather than actually kind of on the art market per se, which is something we don't really track.
If we'd been sitting here a year ago, we'd have probably been talking about NFTs. I mean, were you quite worried at the popularity of NFTs and how the threat they pose to physical art and antiques?
Actually, I think it's quite I see the other way around. I think it's super exciting to see that we're actually starting to bring digital art. Like it's a whole new category, which is bringing younger collectors to the market, which then in turn typically tend to collect physical artworks as well. So it's bringing a lot more new collectors, and it's growing the size of the art market in a way which we've never seen before. So I see that a lot more as an opportunity than actually a threat.
All right, good to hear that. Edouard, it's really been fascinating talking to you today. Thanks for joining me.
Thank you.
Still to come here on Ian King Live, how AR and AI are coming together to help people with hearing loss hear everything around them. Don't go away.
I'm Katie Spencer and I'm Sky News' arts and entertainment correspondent. As a team, we've interviewed some of the biggest stars in the world, the likes of Tom Cruise, Brad Pitt, Sir Elton John. We try to give you an honest sense of how these people really are.
Tap into the latest news and insight. Invest in your future. Sky News Financial Reports, sponsored by Interactive Investor. Invest in your future. Sky News Financial Reports, sponsored by Interactive Investor.
Welcome back. We have some breaking news to bring you now on the legal action that's being brought by families who say that the hormone pregnancy test Primodos caused severe birth defects. Our home editor Jason Farrell has been on top of this story right from the start. He's broken many angles on it. He joins me now live from the Department of Health. Jason, what's the latest?
Well, the news is that the claimants have had their claims struck out by Mrs. Justice Yip, who was considering this. There was an application by the manufacturers and by the government to strike out this claim. In other words, to say that it's not viable, it has no realistic chance of success in the courts, and therefore they shouldn't have the costs of going to court to defend it. And the judge has agreed with them in this case, saying, I conclude that the position has not materially changed in the claimant's favour since the trial that they tried to take back in 1982, all those years ago. It says it would be manifestly unfair for the defendants to require them to incur further substantial costs in defending this action. Further, it's not in the interest of the claimants to maintain their litigation in circumstances where there's no viable plan to progress the claims and no real prospect of success. And I think that is referring to the fact that they didn't have the funding, they didn't have the legal clout to take this to court. That was a lot of the argument in the case, that they just simply hadn't got their funds in place. And therefore this case is going to not go to court, and that will be incredibly disappointing for more than 100 claimants who have tried to get compensation for what they feel was damages that were caused to them by this drug. I have to say, just standing outside here at the Department of Health, less than 3 years ago, Matt Hancock, then the Secretary of State for Health, apologised for those victims for failings following a review, but the government has stood alongside the manufacturers in ensuring that this claim doesn't get to court.
Jason, this is going to cause absolute dismay to the families here. What sort of levels of compensation were they looking for? Jason, can you hear me?
I've lost my comms, so...
Sorry about that. We seem to have lost Jason Fowler. We will, of course, have more on that story throughout the morning here on Sky News. Now, while concerns are being raised about the risk posed by AI, it's proving invaluable for some people. The British company X-Ray Glass has married AR, that's augmented reality, with AI to create smart glasses which provide live subtitling to help deaf people and those with hearing loss. Well, the glasses can easily be mistaken for standard sunglasses, and the latest iteration of the software, X-Ray Glass, can translate into 76 languages, opening up the market for tourists and business travellers. Well, joining me now is Dan Scarf. He's Chief Executive of X-Ray. Dan, welcome to you. How long has it taken to develop this technology?
Well, there was quite a Herculean task that we had to go through to actually get all of this to work. It's something that sounds quite trivially simple, but when you actually try and implement it, it's quite the challenge. So we've been beavering away for well over a year now to bring all of this technology together.
And how big is the addressable market, do you think?
Well, 1 in 20 of the world's population have some form of hearing loss. When you actually start to use some of the other features that perhaps we might talk about later on in terms of our assistant, actually, this is now something which might be useful to people with a whole range of neurodiverse conditions. So actually, you might take that up to 1 in 3 people. When you start to talk about people who go on holiday or maybe go to a business meeting abroad, you could almost be talking about anyone on the entire planet who might want to use this software.
How difficult was it to marry AR with AI?
Surprisingly difficult. And in fact, it's all about speed, certainly with subtitles, because you're in a conversation, you want to be able to read those subtitles in real time. So we had to get that processing delay down to under 1 second. So capture that audio, send it up to the cloud, get it transcribed, get it back onto the phone, and then up onto the glasses in less than 1 second. So that was a challenge. Audio is a challenge, of course, making sure that we've got good quality audio in order to get good quality transcriptions, but you bring all of those together and you have a magical experience.
The AI hardware market in the UK is relatively nascent. I think that's probably a kind way of putting it. Is that going to hamper you with the commercial rollout?
So we don't make the glasses. We partnered with a number of the world's leading AR glasses manufacturers. So these particular glasses, for instance, are made by a company called XReal. We also have partnered with TCL. We've also partnered with Rokid. So for us, this is all about consumers choosing which are the best glasses for them, and then safe in the knowledge that our software will be compatible with them.
And I gather this is very personal for you. You got the idea from a family member, I gather.
My granddad, who was 96 at the time, and like many 96-year-olds, had lost almost all of his hearing, and he was just sat surrounded by his family, unable to engage in the conversation. There was almost an identical story from another founder, Paul, our chief product officer. It was his dad rather than his granddad. But by the wonders of the internet and LinkedIn, we came across each other and we decided to do this business together. We brought a whole bunch of other folks along as well. And we've spent the last year creating this incredible piece of software.
And do you think this is going to have other applications?
So I think the assistant is where this starts to get really interesting. So we've spoken about transcription and translation, but we've also wired this entire application up to ChatGPT. So I can say things like, hey, X-Ray, can you summarize this conversation for me, please? Or, hey, X-Ray, I missed the name of the town that we were just talking about. Can you remind me what it was? Or, hey, X-Ray, what was the thing that I was supposed to do today? So this ability to be able to have access to this real-time assistant the entire time, we think is actually what's going to come to define this product.
Terrific. Dan, it's a lovely story for us to end the programme with today. Appreciate you joining me. Thank you. That's it from me. Coming up next, it's Sam Washington. Thanks very much for joining me today. Cheerio.